Good day, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Thursday, October 1st, 2020. Well, tomorrow morning we're going to get the all-important jobs data, so we want to see what that's going to do. The estimates are that we're going to see the unemployment rate fall to 8.2%, and then the other elephant, and it's the elephant, is what happens tonight. All day long, our Treasury Secretary Mnuchin, Speaker of the House Pelosi have been going at it, trying to find a common ground where they can reach a deal. If they don't, the word is that the Democrats tonight will take a vote in the House on their own package, and then they're going to break and take off now until just before the election, so that would pretty well do that in. You already saw in the marketplace that United Airlines, American, they're starting their furloughs going on. Disney did 28,000. There'll be more, and a lot of aggravation. And I hope we all point our fingers at these people unable to get together to help those that need the help. It's going to be a very serious situation. All right, so you can see behind me pretty much a mixed bag, but I've given you what I think the market is looking at. When we take a look at a daily bar chart of the tech sector, XLK, we see the market came back, filled this gap, bounced up. There's still a gap left over here just recently. And the question is, does the market try to come back and fill it into this area, or does it continue up? The trend of the market is turned back up. If you define trend as having it an uptrend, higher lows, higher highs, well, that's what you've got. You got higher lows, higher highs in the market. You then, what I teach at least, is you filter the trend. You do that in a number of ways. One of the ways that I think is very popular, and at least for me, I really think it's the best way to go, for me, is I find a moving average I'm very comfortable with. The 18-day averages for me. Some people use a 20, some a 21, but they'll be in that general area in the futures markets. Now in the stock market, you can use other numbers as well. So we've got here the 100-day, the 200, some use the 50, as you know. It's whatever you think. But for the short term, I'm really convinced that the way that I teach it makes the most sense for me, and I've back-tested this over many, many years, and I came to the idea that I like what I'm seeing here. I have seen services that will go out and optimize which moving average for the 18 might be the 20, 17, whatever. I've seen those services. I find that they're not worth their time and effort on it. I'm just doing this to get an idea of a filter, and the filter is when you're over that price, the bias is up. When you're under that price, the bias is down. So in this case, we have the swing line, the definition of the trend, higher lows, higher highs, bullish, and I call the bias in the market up. The target on the first run often, not all the time, could be a Bollinger Band. Why? A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. If you think about it, the first time you hit it, you've got now about you've got 4% left of that time after you hit it that you're going to stay out of the band. The band's going to adjust. It's not just going to lock in and stay here. It's based on a formula you can go out and find on Investopedia, on our website, and our futures kit. We talk about all these and we give you ideas about them. So that is a number that I look at the resistance. So what did XLK do? It's gotten up there, and now we're waiting to see what the elephant in the room is going to do, be it the COVID relief package. In terms of momentum, I like the slow stochastics. Now, traders use the relative strength. They could use MACD. I've seen other indicators they can go with. There's many different indicators. I'm very, very happy with the slow stochastics. And because it says slow, you have to understand there's also a fast one. You have to decide which one you like. In my charting course, I teach why I like this one. But suffice to say, it's overbought. My definition, not yours, but mine, is when either of the numbers that make up the slow stochastic, there's a red and a blue. The red uses 3 days of the same formula, the blue 5. I call them days because it's a daily bar chart, but if it were a 15-minute chart, it'd be 3 15-minute segments versus 5. The type of moving averages that you use that make this up behind it, well, that's all in our courses as well. But suffice to say, I define this as overbought, hitting the upper target. The market could pause here. When I come to SMH, for the past 3 days. You can see how you got up there and you're fighting your battle. You got up today and closed over that number. You are overbought. You're in that area. What are the odds of staying over that number tomorrow? Because you closed over it today, my rule of thumb is I count each consecutive close over the Bollinger Band as taking away one of those 5% of the time it'll stay over it. So 4% tomorrow, 96% chance the market will swing the other way. Is that a reason to be short? Absolutely not. That's not what this is about. This is not about playing that the market's going to turn to the right-hand side. The odds favor that regardless of whether it is over that band or not, I don't know how much it's going to drop back within it. The idea is it's going to drop back within it. The market is in an uptrend, overbought, hit an upside target. XLI, the trend is down. Lower highs, lower lows. So this is your industrial sector. If the market feels that the news that comes out of the lack of a negotiation, that could be one of the outcomes tonight. Maybe the market's going to head down to 74.74. Momentum is measured by the slow stochastic as neutral, but the trend is down. Lower highs, lower lows, the momentum is down. By the way, in order to break that, you've got to get over 78.39. On the energy sector, you'd have to get over 30.58 to break the pattern of lower highs, lower lows. And unlike the other charts, this is called an embedded reading. It's when the numbers that make up the slow stochastic go sideways under 80. They lock in. And when they lock in, well, the traditional way to look at the market is it's oversold. I say no. I say it's converted itself when that occurs, and it stays bearish until the red line closes over 20. And when that happens, it's like you pulled on a rubber band and you let go. The market often, when that happens, makes a run to the closest moving average above it. Does it always have to do it? Nothing's always in life, but often, very often. The QQQ, higher lows, higher highs, has stayed over the 18-day average, climbed up and stopped right at that Bollinger Band. So whether you think that this just happens, understand there's a number of people looking at this, and I'm trying to teach it to you in a way that you understand it. They're programming it in, they're trading it, their trade desks doing it. There's pros out there that have done this. Would I ever tell a client to buy over a Bollinger Band? Never going to happen. Because eventually this is what happens. I don't know when it'll occur. That's not my job. I'm not a top picker. I want to keep buying on the way up. That's the key. I want to be with the trend. I like those old Maryland Chads where they'd run the animals through the streets. Why? I want to be with that herd. You want to fight it, but they trample things. That's the idea. They won't be running, I think, the bulls this year in Spain, but that was the idea, right? Then you get to the emerging market. Now, this is an interesting chart. Any close over 64.23 is bullish. Any move back under 63.43 without doing that is bearish. You're right at a key area here. Why? A close over that, you already have the higher lows, higher high. That would then trigger the upside bias. Get under 63.43, then you have lower highs, and I'm assuming you don't take out 64.23 first. Take that out, your downside target becomes potentially, the word is potential, 62.65 down to the lower Bollinger Band and ultimately the 200-day average where it found support last time. In GLD, gold, we've had a neat rally here. It has not taken out yet a previous high. You did so in the futures. The trend is still down, but there's divergence everywhere. You've got momentum that's been picking up for the past week or so. You're still in a downtrend that bounced away from its challenge of the lower band. What are the odds of staying under that black line? Only 5% of the time. You stretched it out right here, and there's that springboard that we talk about. Let this market figure out what to do. What I think the pros will be looking at, if you don't get up and out, they might be looking at the first time this market slips back and makes a lower low. And at that point, they might get bearish. But there's something that happened on this chart. Let me show it to you. This was an outside day down yesterday. Today, the market takes out that high. You caught a group of people right here is how I teach that. When you catch them, the market often goes to the closest moving average to finish that move off. So I can make an argument to get to 180.04. If you do that, you take out 180.02, you negate the downtrend. Interesting play here. I don't think the pros are going to be selling. That's really the point that I'm saying. GDX. The market is correcting an oversold condition, getting both numbers back over 30. Oversold is defined by me, at least, as either of the numbers being under 30. Well, they've gotten away from that. At the same time, the market's made a challenge of the 100-day moving average and the lower Bollinger Band. It found a lot of support in there, and it's getting a bounce. The resistance is 40.51. Close over 40.51, and this market becomes instantly bullish the way that I teach charting. You'd have the trend up as the swing line. If you were over that number, the bias is up, and likely momentum would stay up right with it. As we come to TLT, if you go back to the other day, I was saying, be careful, this is called a pipe. In a pipe, what happens is the Bollinger Bands narrow in. When they narrow in, going sideways, the market's often churning people. You're thinking the market might break out from one of these patterns. It doesn't go anywhere. You broke down yesterday pretty hard, hit the lower Bollinger Band. My theory, and that's all it is my theory, is that when you hit that band, the pros are going to step out of the market. And today, the market tried lower and came back, finished higher. Again, the trend is down, but I hate when you're in those pipes. You've got to prove that you can start a trend outside of it. If you kept breaking down, this would be called a top. You'd be looking lower. That fights the Fed that keeps telling us they're going to keep interest rates low. And in my mind, doesn't mean I'm right, don't have much of a mind. If you don't have a COVID relief deal tonight, the more people are going to be in pain. Why are interest rates going up in that environment? Just got to point that out. FXE. This is a bounce in a market that's just getting itself coming back towards that 18-day average. I don't see anything really important one way or the other going on in that particular market, so I watch. You know, in the afternoons at 4 o'clock approximately, I am posting, between then and 5 typically, I am posting a video that covers 36 today, different SPDR ETFs with very specific buy here, sell there. But it's more than that. It starts off each time with what are the reports for tomorrow? What's the government reports coming out? What are the estimates for them? In the morning, I do a futures and I tell you what's already going on in Asia, Europe. I cover all the main sectors and I ask you often, in fact, you can do it tonight, is there something you want me to cover that I'm not covering in these markets? I'm always looking for that, and then I try to add to that. These are what we're covering right now. And we've added probably 1 or 2 in here, but this gives you an idea of the different markets. And I am not bashful. I think you know that if you watch me. I will tell you, I want you to buy here. I want you to sell there. Here's the stop order as I see it. Here's why the chart action says to do that. So it's as much learning as saying, hey, I want to buy GLD or I want to sell XYZ. Whatever it is, what is Ira thinking about it? That's the guy I want to be. I want to be the guy you say, I'd like to know what he thinks. The cost for 30 days, and it's not free. There is a charge. I had a client today that quit the service. He goes, it should be free. It's never going to be free. Your doctor's not free. My knowledge isn't free. $8.95 for 30 days. Not expensive. I don't think you'll see that. I almost started laughing. It should be free. Yeah. All you need to do is give us a call. By the way, how do you think I'd pay for the studio if it was free to do all that? And if it's free and I'm just doing it out of my goodness of my heart, okay. I laugh at it. I think I'm a good guy and I work hard. All you need to do is go to the website. Under the word research, everything's explained there. We even have a combo offer to get you going in the morning with the futures, like example for tomorrow. Don't you think you're going to look the first thing to see what are the futures doing in the morning before I make a move, a new move in SPDRs or ETFs? Did something happen? Are they down sharply? They did a deal at the last minute. They're up dramatically. What do I do? That's the ideas. I'm Ira. You have a good day. Talk to you tomorrow.